about the section that's called the real estate business for the Pennsylvania pre-licensing class. And real estate transactions are all around us. Okay. Um, the consumers of real estate are home buyers and sellers, tenants and landlords, investors, developers, but they're complex transactions, and they are very complex. Uh, and they involve a lot of money. So we will, or your office manager will work you through when you get to the point where you're writing sales agreements, when you're doing uh, listing agreements. We'll help you with that. And you always should have the support of your office manager and broker to help you through these transactions. I spend a lot of time on the phone with my agents. Cindy spends a ton of time on the phone with them, walking them through these transactions. And right now, listings are the king. So you should be keeping in the back of your mind anybody you talk to who's thinking about listing. You're not allowed to talk to them about real estate right now, but I would get their name and number and write it down. Okay. I'd get their name and number and write it down so that when you're licensed, you can get that listing. We had a new agent, Sherry Cahuth, and she just got her license. She got a listing. One of her neighbors was selling, and she already has 5 offers on it. Now, this is her first week in the business. So if you want to make money in this business, you got to get it straight right from the beginning that listings are the name of the game. Something happened to my slides, so it's going to bear with me. So real estate is a business of many specialties. There's brokerage. So when you get licensed as a licensee, you're starting this journey. There's a lot of different places you can go. There's brokerage, and brokerage brings people together in a real estate transaction, including the responsibilities of the licensees. Your broker's responsible for you, and providing services to customers and clients. So there's the real estate brokerage business. There's the real estate licensee. That's what you guys are going to be. And that's a person who has satisfied the requirements set forth in a licensing agency, which is Pennsylvania State. And the license may be a broker, a associate broker, or a salesperson. Okay. And how many hours of continuing ed? How many hours of pre-licensing do you need to pass your state exam, to take your state exam? 75. How many hours of pre-licensing? 14. No, not pre-licensing. Continuing ed. My fault. Right answer. 14 hours of continuing ed every 2 years. Correct.
Correct.
And the license renews on odd years or even years. Even. And what day? May 31st is the last day. Okay. And then there's appraisal. Appraisal. We'll take that. So there's appraisal, and that's the, we'll need to get Seneca to sign in. There's appraisal you can go into, the process of estimating property values. Appraisers must be licensed in Pennsylvania. And an appraisal is an opinion of value. And we're going to get into appraising in the coming chapters. There's property management. Managing real estate to protect the value of the owner's investment while maximizing the return. So you can get into property management. You can even get into financing, the business of writing loans. So there's a lot of different specialties in real estate that you can go into. You can go into subdivision and development. Saturday, I had an appointment with a guy who has 150 acres. He wants to divide up into lots. So I went out and I'm advising him on how the best way we can get a return on this 150 acres for him. You know, he had a plan where he wants to break it all up into, quarter acre lots. My conversation with him was, where he's out in Washington County. I says, where you're at in Washington County, I don't see us being able to sell a whole bunch of lots, because there's just not a lot of people turnover in this area. You may be better off breaking it up into 15, 20 acre parcels. because somebody will move out to Washington County if they can get a 20-acre parcel and have their own little estate. You know what I'm saying? So home inspection, where yeah, a home inspector, we hire home inspectors and they go out and they inspect the property for the buyer. Most of our agreements are contingent upon a home inspector. Counseling, the activity of providing clients with skilled, independent, professional guidance, okay, to help them make a good decision. You must be a broker to do that, okay, and charge a fee for it. I had a guy one time came to me, had 100 acres, and he wanted to build new homes on it, and he wanted me to do a market study to him to determine, just almost like I did for this guy out in Washington County, and I charged him $5,000, and it was about a month. I did all kind of homework on it, and I showed him, well, you know, you can put these kind of homes in, you can put some patio homes in, you can do this, you can do that, and this is what the market will accept. Because a lot of times, like the guy went out on Saturday, he's out in Washington County, there's just not a lot of people looking to move in that area. So when I did my research, I said, I don't see us selling 30, 40 homes sites out here. But I do see us selling 6 or 7, 8 20-acre parcels. Education, what I'm doing, teaching. You have to have a license to teach. And then there's other areas of specialty in the brokerage business. Some professional organizations that you need to know about. One is the National Association of Realtors, and they call it NAR, N-A-R. And it also sponsors various affiliations. NAR is the largest trade organization in the country. There's the National Association of Real Estate Brokers. I would know NAR is the largest trade organization in the country. Out of everything I just said, and to counsel, you need to be a broker for that service and charge a fee for it. So there's different types of real estate. There's residential, that would be all properties used for housing. There's commercial. There's mixed use, okay, commercial and residential in one building. You see a lot of these when you go down some of the cities. Main Street in Menneson, Denora, Monongahela. Don't you go down those streets, they're main streets, and see storefronts on the first floor? And then if you look up, there's apartments above that. That's mixed use. Industrial, warehouses, steel mills, power plants, agricultural, and special purpose. Churches, schools, cemeteries, government-owned properties, Tammy, are all lumped into special purpose. So the real estate market is a place where goods can be bought and sold. And it all has to do with supply and demand. So 2 characteristics of real estate govern the way the market reacts to the pressure of supply and demand. Factors affecting supply: labor force, if you have enough people to build new homes. Right now we don't. Government controls on monetary policy. Who controls the monetary policy in the United States? The Federal Reserve. And how do they control it? They control it by dictating how much reserves the bank has, right? So if the bank has to keep 25% of their money in reserves, that means they only can lend 75%. If they lighten that up and they say you only have to keep 20%, Ellen, now they can lend more money, right? And then the discount rate, the rate that the charge each other, or the Federal Reserve charges a bank to borrow money, and then they lend it. So government controls has to do with supply and demand. They feel that the economy is too hot right now, if you pay attention to the news, right? So how they want to slow the economy down? The government's going to raise the Fed rate, which in turn is the rate the banks borrow off each other, borrow off the Federal Reserve. So they're going to raise that rate, and they feel that will slow the economy down because it'll cost more to buy houses, to buy cars for your credit cards, and so forth. So when the economy's down in the dumps, like it was during COVID, they lower the rate. As a matter of fact, the rate was zero between banks, between the Federal Reserve. Now they're feeling the economy is overheated. Plus, there's a labor shortage, so there's not enough people working to build new homes. So now they're going to raise the rates up to slow the economy down. Can you see how that would work? For example, if you can buy a car and you can get 0%, you're more likely to buy a car than if you had to pay 3% interest, right? Maybe some people can't even afford that car 3%. You have to buy a smaller car or not buy at all. So also factors affecting demand, population, and demographics. You know, Allegheny County is one of the oldest counties in the whole country. So in Allegheny County, you probably have a lot of people who are moving into condominiums, who pass away and they're selling their homes. So the demographics of an area has to do with supply and demand. And right now, supplies are very, very, very tight. I've never seen them this tight. Okay? I've never seen them this tight. If you get a listing, there's a lot of buyers looking for it. As they raise those interest rates up, Jake, as they raise those interest rates, that'll slow demand for housing. And then as it slows demand, the inventory will build up. And it needs built up. It needs built up. Let's talk a little bit about home ownership. You could have a single family home. It's considered home ownership. Apartment complexes, condominiums, co-ops. We talked about co-ops, right? With a co-op, do you get a deed? Do you get a deed with a co-op? Yes or no? No? What do you get? A share of stock. Is it considered personal property or real property? Personal property, right? Okay. And then with a condo, do you get a deed? Yes. And is it considered personal property or real property? With a condo. What's that? Real property. Right. And you can own your condo either as joint tenants, right? Or you can own it in severity. And what's the other one that you can own a condo in? Tenants in common. Tenants in common. And then the common area in a condo, you have a fractional share interest in that as what? Tenants in common. Okay, so for example, my mother's condo we own as joint tenants, me and my wife. So the condo we own as joint tenants with the right of survivorship because we're married. But the clubhouse, the streets, the grass outside, we have a fractional share. If there's 80 units, we own 1/80th of that, and it's in common with everybody else. Okay? You guys are going to be okay. Planned unit development, a PUD, sometimes called a master planned community, can merge housing, recreation, and commercial units in one self-contained development. Give me an example of a PUD that I've given you at the class. Waterfront, right? You can go to the Lowe's Theater, watch a movie. You can go across the street to those condos or townhouses, whatever they are, I'm not sure, and you can live. Or you can go to the bike trail right behind those units, and you can bike all the way down to the point. And then there's converted use properties. Give me an example of a converted use property. How about an old factory in the city? Did they convert to residential lofts or something like that? Okay. really burning through this, but this is kind of common sense stuff, ain't it? Common sense stuff. There's retirement communities, okay, that 55 or older. High-rise developments. They can be mixed use. MUDs, MUDS, combined office, stores, and apartments in one building. We see that a lot in these downtown cities. In downtown Pittsburgh, you see it. Modular homes, known as prefab homes built off-site, and there's timeshares. So I'm really burning through this chapter, but did I stump anybody here so far? Did I say anything that you're saying, oh, I understand that? No. Okay, good. I want to get through this practice class, man. We're going to get through it. We're going to get through it. I'm excited. So let's talk a little bit about mortgage terms. You can get conventional financing, right? How much is the down payment for conventional financing? Excuse me? 20%. Typically 5 to 20%. Okay. Then FHA, 3%. And then with FHA, you have mortgage insurance, correct? You have an upfront fee and a monthly fee. Or should I say private mortgage insurance? No, mortgage insurance, I think, on FHA. And then VA, how much do you need for a down payment? 0. But you have to pay an upfront funding fee with VA.
What's conventional 5 to 20%?
Conventional is 5 to 20% down. And we're going to get into financing a little deeper as we go through these chapters. And then you have PITI, PITI. What's that stand for? Go ahead, Azaria. And insurance, right? So most loans, when you make your loan payment, Christine, do you have your name card, Christine?
No, I forgot it.
Oh, geez, oh whiz. Geez, oh whiz. Most times when you have a loan, you, hey, I'll write one out for you later maybe, but you can bring it Thursday. Most times when you make a loan payment, for example, my loan, I pay principal, interest, taxes, insurance. I pay one payment. And then every month I pay a 12th in that payment of my taxes. And every month I pay a 12th of my insurance. And then when my insurance comes due, the bank has enough money, they pay it. When the taxes come due, they have enough money, they pay it.
What's FHA? 3%?
3%. And FHA is government funded. Government insured. VA is government insured. Even conventional can be government insured because when they sell them to Freddie Mac. Freddie Mac typically buys conventional. Fannie Mae typically buys the VA and FHA. And then Ginnie Mae is special programs. So you have to, there's investment considerations when you're buying property. There may be tax benefits. There may be capital gain exclusions. So for example, right now, if you sell a house and you're married up to around 500,000 and it's your primary residence for 2 years, you can sell that house and not pay any capital gains tax on it. So if you make a profit, you can keep it, not pay tax. But if it's not your primary residence and it's investment property, then you would have to pay capital gains tax. So there's tax benefits, the capital gains, and right now you can write your mortgage interest off on your primary residence and rental properties. So when you're looking at real estate to purchase it, you want to look at some of the tax benefits of owning it. Does that make sense, Christine?
Can I ask one question that
Yeah.
I was stuck on last night? So for the liens I went over back in lien and all that, it was saying it's like a collateral.
Yeah.
But that other word, the H word, I can't pronounce it that good. Hyper, I have it.
Let's do this. Let's go. You're
It was saying that was like collateral too, that it's like a promise that if you don't pay something.
is that that term that's in a mortgage? Well, let's do this. We don't know the question, so I can't answer it. When we go on a break,
Yeah, I have to find
you
it.
bring the book up, me and you'll go over. Okay. Okay.
Hey, I just got a call from the daycare, Jackson.
Okay.
I have to go get him.
Okay. Okay.
I just called Liz.
Okay. I'm not sure how to do this this taping.
Do you want me to call Liz and have her come up?
She don't know how to do it.
She
No,
just has to end it.
just go. Go ahead. Go do what you need to do.
No,
Take care of your boy.
Do you want to show me
Okay.
something real quick? On how to turn it off and on or something?
Yeah, I mean, it's pretty easy.
That's okay. No.
You're not gonna know how to do it.
I know how to shut it off, and then we'll figure out how to start it, or we won't take the next class. Go ahead and go do what you have to do. Okay. Let's talk about homeowners insurance. So there's good luck with them too, huh? Kids are always something.
Super crazy
I
contagious.
thought he was
too.
Yeah.
Go ahead. How do you pronounce that, Ray?
Hypothecation.
I had to keep putting on Google.
And what is that?
And I kept saying it.
You gotta
and I had
practice
it.
it.
What does that mean, Ray?
The pledge of property.
Collateral.
The security
Good luck.
for a loan.
Yeah, so like if you put up your car, like say you don't make a payment on
They'll
your
take
house,
your
they
car.
can take your car.
Yeah. If you don't put up, yeah. If you put up your house and you don't make a payment, they'll take your house.
So what's the lien then? Because it was saying I was collateral.
Well, that's a lien against your car or a lien against your house. The lien is what they put against it so that if you don't pay, they can take it back. The lien is a financial charge against something, right? What's the definition for lien? But we're getting off track,
Yeah, I know, I'm
but that's
sorry.
okay. But what's the
Right.
definition for lien real quick? Go in the back of the book, look it up.
Application.
Yes.
So basically it's just the same. You said that was the definition for lien?
No.
Oh,
What's the
okay, I'm
definition for
sorry.
lien?
I was confused.
That's all right.
Let's see. A right given by law to certain creditors that have their debts paid out of the property of defaulting debtors, usually by means of a court trial.
Right. So if they put a lien against your property, when you get a mortgage, they're putting a lien against your property, right? When you get an auto loan, they put a lien against your car. And the term they use for that
Application.
is hypothecation. Okay. And if you don't make and then that's the collateral. And then if you don't make your payments, they take it.
Right.
See, now when you get a credit card, typically you don't have collateral, do you? Anybody got a credit card here?
Yeah.
Okay, you don't have collateral with a credit card. So if you don't make payments on your credit card, they have nothing to take off you. If you don't make payments on your car, they take your car off you. Your car is the collateral. The house is collateral.
Yeah, I think I had just got thrown off because it was saying like a lien was security for, like, if you don't make payments.
Yeah. Yeah. If you don't make payments, they come get your car.
So it's just the same as the H word.
The
There's no
hypothecation is the term they use in the mortgage, correct? What's the definition?
The pledge of property.
That's the pledge
as
of property.
Security for a loan.
Yeah.
Hypothecation, just remember.
So in your mortgage, you'd have
Okay.
hypothecation
Okay.
clause, and you're pledging your property as collateral for the loan. And if you don't make your payments, they'll take it. Okay. So homeowners insurance. You have the basic policy, because you have to have homeowners insurance. If you buy a house, the lender's going to require it. And if you're cash, Lex, they're going to, you still want to recommend to your client that they get insurance in case there's a loss, they're covered. So there's the basic policy. It's the most common.
So when you have your house completely paid off, you don't have to pay homeowners insurance?
No.
Yeah, you don't. but
You should though.
Yeah. When you have your car paid off, you don't need insurance on it either. But you should. Because what happens if the house burns down?
Yeah.
They
Right.
also-
Okay.
They also have umbrella insurance.
So So you have the basic policy, which is the most common. Then you have a broad form policy. And with the broad form, you can get extra coverage. I would just know that. The broad form, you get some extra coverage. And then you can get insurance on a condo and even apartment and even rental insurance. If you're renting, you can have your personal property insured inside the rental. There's liability insurance. Anybody know what liability insurance is? Give me an example. What liability insurance is?
Like the basic, like you have liability on your car, it doesn't.
No, liability insurance on real estate would be if somebody got hurt on your property and they tried to sue you. That would be the liability insurance.
The liability covers you.
Like if you slipped in my office, my liability insurance would cover that and broke your leg. Co-insurance clause. It's required when the owner that the owner maintain insurance equal to a percentage, usually 80% of the replacement cost. So the co-insurance costs. And then there's a comprehensive loss and underwriting exchange. It's a clue report. It's data on consumer claims. So, for example, I was on the phone this morning with Safe Light. I picked up a piece of something on the turnpike and broke my windshield. So I'm getting my windshield put in. So there's a $500 deductible. The windshield's about $1,000. So the insurance company will pay the other $500. And I asked my insurance, I says, will that go against my report and jack my insurance up? Like if you get in a car accident, that goes against. Well, this is what the clue report is for houses. So if you have a loss and your house catches on fire, then next year you try to get insurance, your clue report will show you had a loss. If somebody slips and they sue you and your liability portion has to kick in, that would show on your report. It's just like car insurance, the clue. So how are you going to remember that clue?
It's like car insurance, your report.
What's that?
It's your report.
It's your history.
Yeah.
It's your claims history. Flood insurance. Okay. It's administered by the Federal Emergency Management Agency, FEMA. You've heard of this. When there's hurricanes, they always talk about FEMA coming in. I would know that that's the Federal Emergency Management Agency. Elevation certificate. Okay. An elevation certificate is, let's say your property's in a flood zone, but you don't believe that the house is in the flood zone. You could hire a surveyor and they could come out and they could do a survey of your house elevation versus the flood zone, and they can determine if your house is in the flood zone. We just had this yesterday. I was going over with one of the agents. That guy owned a property down in Budtown, down on the York River, and he had a report that showed that the garage, the flood elevation was like 750 feet and 0.78. The house was 0.78, less than a foot out of the flood zone. So if he can show this elevation report to an insurance company, they're not going to require flood insurance. Okay. Special flood hazard areas based on flood history and location. Flood prone areas are identified in as special flood hazard areas. And they have maps. So it's good to know what your insurance, what's covered and what's not. If the wind blows a shingle off, is it covered? I don't know. You got to recommend to your client that they talk to an insurance professional and explain the policy that they're getting. Advanced purchase is required. So if you're going to, Tammy, buy a house and you're going to close on it this Friday, you already have to have the flood insurance in place before the closing. And you have to name your mortgagee that if the house burns down, they get paid first. Who's your mortgagee?
Never mind.
the lender. And then there's mine subsidence insurance. Okay, and it's administered by the Department of Environmental Protection. So let's see if we can get this to work here.
So I have a question on FEMA. So FEMA in real estate only is with flood insurance?
Yes.
That's it?
Yes.
Is it common for your homeowner's insurance, the coverage that you have to have to exceed what you actually pay for it?
Typically, it's the purchase price.
They more than doubled mine, because they said that in order to build our house.
That was that clause that we talked about.
Mm-hmm.
Yeah, the co-insurance. Yeah, I had that same problem just recently. Let me find out what's going on.
Although FEMA,
See a national.
FEMA does have a excellent recovery program, we also have what we call mitigation. And mitigation is to prevent future loss of life and property. And part of that mitigation division is the National Flood Insurance Program. And the program consists of three components. There's floodplain mapping. FEMA creates what we call the flood insurance rate maps. They're mapped for every community in the country, and they delineate the risk areas. The second component is flood insurance. In other words, flood insurance is a federally subsidized insurance program that protects homes and businesses from flooding. And that leads me to the third and final component, floodplain management. FEMA makes an arrangements with the local communities that if they adopt and enforce our minimum standards, we will provide flood insurance to residents within those communities. And one of our minimum standards is that the lowest floor of any structure has to be built at or above the base flood elevation.
That's where you would use the elevation certificate, right? What did we call that in the last chapter? What was it called? How do they determine where?
Special flood.
What is it?
Special flood.
No. What?
Elevation certificate.
What is it?
Elevation certificate.
Elevation certificate. That's where they say. So she's saying that you can't build unless you're above the flood zone, right? So how do you determine that? You hire a surveyor, and they come out and survey the property, and they're using elevation. So when they use an elevation, a survey, what are they typically looking for as a starting point to help with that elevation? A benchmark. Remember, Chuck knew right away what the benchmark was on West Newton Bridge. So that's what they use that for. Does that help explain it a little bit? Okay.
Usually, the higher above that base flood elevation your lowest floor of your house is, the less your flood insurance premiums will be. Well, along those coastal V-zone areas where you expect a high velocity wave action, the lowest horizontal structural member of that structure has to be at or above the base flood elevation. This is to allow the waves to roll under that structure and to create less damage to that structure. In your A zones, we also have minimum building standards, and one technique that we like to use is to put in openings. Some of us refer to them as flood vents. In other words, if you put in openings around your foundation walls, which allows the water to flow in and flow out and reduce the hydrostatic and hydrodynamic pressures of that water, hopefully in a flooding event, your structure will have less damage because you will maintain the integrity of your foundation. We also require that, and the community enforces these, that all your utilities, your furnace, your hot water heater, be elevated to or above that base flood elevation to once again prevent damage. And it has been shown that if your house is built properly in accordance with our minimum standards, those structures that are built properly are less damaged by a flooding event than those that are not.
So I'm just going to stop it there because she's a little bit hard to hear. But you picked up a couple of things from this video. The elevation, right? And now you see where the elevation comes into play. Because if you're going to build a new home, like for example, on my bottom lot, it's part of it's in a flood zone. So I'm in a process right now of having engineers do an elevation to show me what part's in a flood zone, what's not. And if I am building in a flood zone, then I have to do certain requirements, like those floodgates they have. So if I was going to build the building in the foundation, if it was in a flood zone, okay, I'd have to put those floodgates in, so if the water comes up, it just doesn't cave the wall in. The water is able to go inside and then raise evenly, and that won't buckle the wall. Where a wall buckles is if you have 10 feet of water on the outside and nothing on the inside, it pushes the wall in. But if you have 10 feet, when we got our swimming pool, when we put our pool in, we had a fiberglass pool, okay? Just for an example. And when they put the pool in the ground, when they start putting gravel on the outside, they would put water in the pool up 2 feet, then 2 feet of gravel. Water, another 2 feet, another 2 feet of gravel to keep the wall from buckling. Because if you just put all the gravel on the outside and you didn't put any water inside the pool, it would buckle. And it's the same thing when you're building in a flood zone. Does that make sense? A little bit tidbit. I don't know. You're probably not going to need it for the test, but one of these days you may be on Jeopardy and that answer may come up. Okay. So I have some handouts just to help you, because I think the big thing here is knowing who handles the mine subsidence and who's handling. Ray, can you pass one of these out to everybody and then bring that folder back to me? And Ellen, can I put you to work over here? Pass one out to everybody. Squirrel, you help me try to start the next video?
Are you done right now?
I'm going to finish it. I'll show you how to stop it. And then you can, I'll put you on the payroll today. And that darn Ray brought those cookies last week. And I was going to bring them to the office, and I left them in my car. And Thursday night, about 8 o'clock, I got into them. Oh my God.
You got some milk.
Yeah.
Sarah.
Excellent.
Thanks. Try not to be.
Perfect. Okay. Zaria, the donuts were perfect. Perfect. Okay.
I don't think anybody ate the bear yet.
It's too cute to eat. There's a bear donut.
Is there a bear donut? So the one handout I hand you that has Pennsylvania Department of Environmental Protection, that's for mine subsidence. That's a typical mine subsidence policy. And typically it's about $1 per thousand. So if you were going to get $100,000 mine subsidence insurance, Lex, it costs you about $100 a year. So it's very reasonable. It's very reasonable. But I want you to know who gives out the mine subsidence. Commonwealth of Pennsylvania Department of Environmental Protection mine subsidence insurance. So that's who gives out the mine subsidence. So circle that. It's right across from the Pennsylvania.
Wait, what?
Circle who gives out the mine subsidence insurance. The Department of
Commonwealth of PA.
Commonwealth of PA Department of Environmental Protection.
Right across from Pennsylvania.
Right.
They,
Okay. Now the other is flood insurance. Now up on the top right-hand corner, who gives out the flood insurance? Circle it. Just know those two. You'll be okay, Jared. Okay? Just know those two and you'll be okay. Okay, that's the end of that.
so
Section.
all flood insurance is through FEMA.
Yep, yep. Take a break, 5 minutes. So Lex, let me show you how to do this. So we have to click end stream. Now, so